we've just been making small introductions. I just introduced David to everyone. So Mark, everyone, welcome Mark. Mark, why don't you take over?
Welcome, Mark.
Okay, I finally got it going here. Sorry about that.
Awesome.
Yeah.
Hey, Mark.
How's it going? How you doing?
Good. It's been an excellent day, beautiful day. It's a beautiful day for a meetup.
There it is. How are you, David?
Good. How are you? Good to see you.
Good. Absolutely. Yeah. The nearest thing we have to being in the flesh here nowadays.
Yeah.
But yeah, so we'll get started. I'll give maybe a brief intro on David. David and I we met initially at this very meetup here when we were in person in Westfield, and I came away very impressed. David is the co-founder of Alpha Funding Solutions and has gone on to do great things in the multifamily world, which he'll talk about today. But with that, David, if you want to take it from here and kind of speak to the topic today, which is raising capital or unlimited capital to do more deals.
Sure. We're good to rock and roll, everybody. It'd be nice with the beautiful weather up here in New Jersey to go outside and walk and talk at the same time. It's an amazing day today. So I'm happy to have you guys join in lieu of the nice weather. Hopefully I can provide some really valuable information. Raising capital is something that I'm very passionate about and is a really, really important piece of any real estate investor's business. And so there are a lot of ways to accomplish it. You can outsource, you can get equity, you can get debt. You most of the time will get a combination of both. I'm going to talk today primarily about raising equity. That's capital that you're going to be able to use as down payment money with a lender, whether you're buying a large scale multi, a small 2-3 family with a family member or friends. But there's a lot of things that need to be considered. It's not rocket science, but you definitely have to be thoughtful about what you're doing and why you're doing it. And there's also a lot of legal framework around raising capital. So before I get too deep into it, I will just say I am absolutely not an attorney. I will talk about different types of solicitation. Please consult with a securities attorney if you're going to be raising capital. And I'm hearing a little feedback. Does anyone else hear that?
Yeah,
that me?
You should be good now.
Okay. So definitely want to link up with a securities attorney. I'm sure amongst the brainchild of all the people in this group, including myself, could help share some names of folks that can assist in that. And I'll touch more about that in a little bit. Before I do, I'll just give you a little bit more background about myself and specifically about capital raising. Oddly enough, my first time raising capital was in the early 2000s. I was selling real estate and flipping houses and building new construction homes. I oddly got into the handbag and import business with a family friend as like kind of a side business. And we had gotten an order, started making some traction. We had an order for 215,000 handbags from Spiegel, which is an online catalog company. And when they told me they were giving us the order, I was like, still fairly young. I was like nervous, excited. I didn't know what to do with myself. I walked out of that meeting so excited. I'm like, oh my God, how am I going to fund the manufacturing of this, of the bags? I need about over $500,000 to place the order and about $100,000 liquid. So I ran around and asked everybody I knew that I would give them a 10% return in 3 months based off of this purchase order. I didn't raise capital for a long time after, but it was kind of exciting, and necessity creates a path forward a lot of times. So rose to the occasion and was able to offer a very attractive return. And I'll talk about that in context of real estate. So move forward to 2007, we launched our funding company, Alpha Funding Solutions, which we recently in 19 did the sale merger on. But I headed up all of our capital management and capital raising efforts. At the time we did the merger, we had almost 120 million of loans on the books. About 40% of that was raised from retail investors. So we had over 150 retail investors with thousands of positions. Some of them were, as small as like $25,000. And so that was actually kind of easy because that type of investment provided a very high level of return and a lot of instant gratification, which is very different from investing in multi. And I'll explain why. In the lending business, you loan money out, you get payments that you distribute monthly. It's a specific coupon. The investors get paid the same amount. They're secured by the loan, and they're short-term duration loans. So they would put money in, and they would get paid off in 6 to 9 months. 7 maybe go long, but they got their principal back. So the most important things are investors want to see a return of principal. They love seeing cash flow along the way, although not all deals provide cash flow when you're doing heavy value add. And it was that constant touch. So I had a leg up when we transitioned and started growing Lucern Capital Partners, which is our real estate private equity firm, and we own and manage multifamily apartment buildings. We've transacted now on a little over 80 million, but we have a lot in the pipeline now, and I'll talk about that in terms of the funding vehicle that we use and how we're raising capital. But right now we're in a strong growth pattern, acquiring mostly in Charlotte and Philadelphia, although we're active in New Jersey and some other markets. But up until October of last year, we raised capital on a syndicated basis, meaning we would find a deal, underwrite it, and we would work on getting the financing together and then put together a marketing deck and go out and offer shares into that individual investment. So you're tied to the success and failure of that investment. We launched a fund vehicle in October, which creates a more diversified investment for the investors. And I'll get into that, why it's important in understanding what kind of product or investments you're going to offer to folks. So there's pros and cons on both sides, but we've been active in that now. We're raising 25 million in equity, and we're about a little over 15 million in and have a little bit ways to go, but that's being deployed into these multifamily assets. So I definitely have had a lot of experience, made a lot of mistakes. I've learned along the way, aligned myself with great people, great, service providers. So let me get into some of the nuts and bolts here. I'll start with the attorney and then get to some more exciting stuff, right? The discussions on attorneys and legal is never super fun, unless, of course, you're an attorney. But so having a securities attorney is very, very important and very critical if you're going to raise capital, because there are regulations that are around it, and there are typically filings that you need to make if you're going to go out and raise capital. Technically, even if you're bringing, a couple of your friends together and buying a 3 or 4 family house, you should have the proper filing. It's low and below the radar. I am not suggesting not to do it, but plenty of people do, and that's below. But if you're going to build a larger multifamily business and you really want to grow the units that you're managing and create a real investment company, you have to really think about how you're going to set that up. And it's not a set it and forget it. As I mentioned, we navigated from a syndicated vehicle to a fund vehicle, and we'll continue to do syndications. It's not an all or nothing for us. So when you talk to a securities attorney, they're going to look at what you're typically going to invest in. You're kind of laying out, you have to understand what your strategy is going to be, and you have to understand who you want to bring in as investors. And that really helps define what type of filing you're going to do. Most of the filings require investors to be accredited. I can touch on that later if people need to know or understand what accredited is, or maybe I'll explain real fast. But the two ways that most people would qualify as being an accredited investor is either by net worth or income. Net worth means you have $1 million of net worth that is not counting the equity in your primary residence, and that's $1 million above any debt that you may have. Or, and it's not both, but you could go after, or not go after, but focus on the income level. And on the income level, you're looking at $200,000 a year for the last 2 years of income if you're a single person. And if you are a married couple, you would have had to have $300,000. So there are filings that can be done where you don't need an accredited investor. But one of the broadest strokes that allows you to go out and do something that's important, I think, in capital raising is the ability to general solicit, right? You want to start small and start with your sphere of influence, and I'll touch on that in a minute. But you'd like, in a lot of cases, you may want to be able to go out to the broader public and share information about what you're doing and attract investors. With that said, if you are going to file for a general solicitation, there are more stringent requirements on you as the manager to accept those dollars, and that's a third-party accreditation or documented proof of that accredited status. So you want to talk with the attorney. The other piece outside of selecting that is really defining how the finances and the economic splits will work in the either syndicated vehicle or in the fund. And this ties in with the next topic about trust. The number one reason people invest with you or in a real estate deal is not the returns. Some people may disagree, but I'm going to tell you it's trust. And I've heard it many times, and trust does not happen overnight. And I know you're listening and saying, geez, like, that's the biggest thing. Like, that's abstract. How do I get there, right? And how do I do that? And it seems like a long game. It is, but if you're building a business and you're not going to come in this to do one deal and run out and get rich, which doesn't usually happen, you have to commit to a strategy and a plan for long term. So building trust can be done in a lot of ways. I'll talk about things that may be somewhat common and then tie it back in to the splits that you set up in your filings or how you set up your investment. So obviously the simple things are like listening, strong communication, letting them know what's going on, when they should expect things, providing thought leadership, knowledge in the asset class or the investment that you're intending to take people's dollars and manage in, being sincere and really spending time getting to know them. They're going to entrust in you to manage their capital, and you need to take that seriously. It's not a light job, but that happens over time. And I found that a lot of investors will spend a lot of time looking and talking to you about stuff. And then eventually, as they get comfortable and see you more, they'll come in. And if you do right by them, they'll invest more and more. So above anything else, it's taking care of your investors through communication. And I'll talk about some technology and reports and things people want to see. But I also want to talk about trust as far as you can kind of fabricate, I don't want to say fabricate, but fabricate trust through how you structure your deal, right? So if you think about it, every project has a certain return profile. Let's say a project level is 20%. There's money that's going to flow through. They call it, the waterfall, or how money gets split up, right? So when you're new or newer and you don't have a track record, you're likely going to want to, and some people may disagree, but you may want to, in lieu of the experience and relationship, you may want to front load returns to the investor, especially if you have limited dollars or no dollars to participate side by side with the investor. That a lot of times to investors is going to be very important. How much skin in the game do you have? But if you don't have skin in the game, the other way that you can do that is structure your returns to the very back end, meaning you're going to guarantee, provide the project makes that amount of what they refer to as a preferred return. You're going to achieve a certain level of a return. If it's, let's say, a 3-year project, 5-year project, you're going to achieve 5, 6, 7, 8% annually. And you can go high with that number, you can go low, but that they're going to get that return first. And then there's some type of split that happens thereafter. So you may say, look, I want to, if you can do a deal and get an 18% return, maybe you really woo them with a very high preferred return, like a 10% return. And you can say, look, I don't have the capital to put up, a large sum of money, but I'm going to put in some meaningful dollars for me. But what I can tell you is I spent a lot of time becoming an expert in the market that I'm looking at. I built incredible relationships. I have a great lender and a couple banks that I can work with. And the way that I want to do this to make sure that you're comfortable is I am going to back end my stuff and provide a pretty high level return to you before I take anything for myself. And you're not going to want to work for free, and that will help create an alignment of interest. So there are ways to structure a deal to help, like I said, quote unquote, build trust outside of the, those, abstract items I talked about before. Hello, Jason. He's back from soccer. All right. So that's really critical. And if anyone wanted to connect with me, I'm happy to share some other ideas on deal structure, but a securities attorney will be able to walk you through that as well. But be very thoughtful about it. You obviously are not working as a charity. You're trying to earn a living for yourself. But in the beginning, you're trying to build an investor base. And unless you have a lot of dollars to pony up with them, or you have a long track record of experience, the first 10 miles of a 100-mile race can sometimes be the most challenging, or like getting a spaceship into orbit. That's when you got to use the most power. So you may have to give up some on those economics to help offset these pieces, but be thoughtful about that. I want to talk a little bit about how you can find investors and what you should be doing to prep them for when you do have an opportunity, right? I said at the beginning, when a deal comes along and you're ready and you finally got an offer accepted, it's crunch time, right? For any of you who closed on multifamily deals, from going through your due diligence and your market comps and touring the property, working on all the bank financing, which can be very challenging from a paperwork and financial perspective. The last thing you want to do is also burden yourself with having to hustle for every last dollar. So I used to talk about in Alpha, when I coach a lot of people on fix and flip, I'd say, look, in a way, fake it till you make it. Not that you go out and do anything with bad intention, but as you're looking at properties and you're making offers and you're doing things, you should be devoting just as much time to relationships and to talking to people about what you're doing and why you're doing it. If you have passion about it and you really devote yourself and get educated, and it could be through working side by side with other folks that you find are experts in the field that are willing to have you work with them, or starting on a smaller project. You really want to start looking at who's in your email list. You want to start, put the shame aside and start sharing info about what you're doing, whether it be on LinkedIn or Facebook, or for those of you who are on, what's that new app that everybody's talking on every day?
Clubhouse.
Someone shouted out.
Clubhouse.
Clubhouse, right. Go in, ask questions, be part of a community, share it with people. If you're at a family event, talk to your family. Maybe they're not going to invest with you, or maybe they would, but practice on them and say, this is the type of investment that we're looking at. I've been really getting educated on the market. And so you really need to start sharing that info way in advance of the deal, because when the crunch time comes, you need to be able to bring them in. So you should have these discussions with the securities attorney in advance. You should be able to have a doc set that you can go to and then share with the investors. So when you do find this investment, you're going to obviously select the deal structure that we talked about. You have to properly size the capital that you need. So you have to be super diligent and make sure you talk with your lender, understand what their costs will be. Third-party inspections and all the stuff for the bank can get costly depending on how big of a deal is. So you have to have that capital to pay for that before you close. You're going to have deposits, and then you're going to have other closing costs. So it's not just the down payment, but there's other closing costs, and there may be working capital needs that you may have to get the project moving if you're doing a value add. So you may have a construction loan to handle that, but you have to float money in between the draws. So you would want to raise all that capital up front. And so you want to size that deal. And then you're going to put together a marketing deck that really talks about, obviously it'll have disclaimers, it'll have like a teaser sheet that will provide a high level overview with the return profile that you're projecting, maybe with cash flow that you're expecting, or maybe a footnote on depreciation or whatever. You're going to talk about the local market and share details about the asset and the comps that help you derive at the return profile and some financials that back that. If anyone wants, I am happy to send an example both of an individual syndicated deal marketing deck from a previous deal and also from our fund structure from the fund vehicle. You could shoot an email to info@lucerncapital.com. That's LUCERN capital.com. And I'd be happy to share that with you. Our stuff is not the gospel. Ask other people. It's important to look and read as many marketing decks as you can and take what speaks to you and how you want to talk to your investors. So one of the things that I found really helpful that a lot of investors I find easily translates with is doing an example of what, let's say, $100,000 investment may look like and showing how that looks over the life of the fund. Because as much as, and I'm talking to you guys and we may have a varying degree of knowledge that's listening in. I talk to a lot of really, really intelligent people, both in finance and every other walk of life. And I don't want to say it's surprising, but this is not what they do on a daily basis. So when you're talking about cost segregation and you're talking about waterfalls and all this stuff, it goes lost on people a lot of times. So you want to find out from them what's important. You want to try to break down simply what that investment means to them. We all sometimes have a habit of sharing too much information. So you want to try to break it down. The best way, I think, is that when you're working on the marketing deck, you want to share it with family and friends that have no knowledge about real estate. I was actually shocked yesterday. I was on the phone with a gentleman who's done incredibly well. He's, runs an investment bank, has been involved in, putting together SPACs for a long time. Like, last year made over $20 million and has invested in a lot of different, stuff on the equity side as well, but has no real knowledge of real estate. And, I have to take a step back because I assumed he was, I don't want to say he's not knowledgeable, but not as knowledgeable about real estate as I would have thought. So you really want to share whatever marketing deck you're going to start putting together with people that don't have knowledge of real estate. Get their feedback. It could be, like I said, any friend or family member. And do this in advance. So like you talk to the securities attorney, you start working on the template for your marketing deck. You start thinking about deal structures that make sense. And so you have a lot of that together as you start to move forward. I think, I want to just circle back a little bit to how to keep communication up and how critical and important it is. Because we all start somewhere. The first deal I ever did in real estate was a very small fix and flip back in 2002. And I'm thankful for the people that I've met, the mistakes I've made, and the things I've learned, the money I've made, and the money I've lost. But net, I've continued to grow and been committed to education and committed to learning and growing. And so, again, if you're looking at making this investment to build a real estate business, you have to treat it that way and realize that, the first couple years can be very challenging. But when you do have a deal, you have to make sure that you keep up strong communication throughout the life of the investment. So one of the things, and it may be, you may be capital constrained day one to do this. For us, we use a system called IMS, and it creates an investor, it has an investor portal, and it tracks deal numbers, and all of our quarterly communications and everything goes through there. It's great because they can go in 24/7. They could look at their balances and distribution. It may be tough initially to make that kind of commitment, but if you aren't, just as much as you need to find the assets and manage them, you also need to communicate back to your investors. At a minimum, you should reach out on a quarterly basis. I could also send examples of some investor communication. Again, I think you should ask anyone that that is doing, that's active in the space, if they'd mind sharing it. Take a blend of what everyone does and make it your own. But it's really important to talk about the overall market, what's going on, and then drill down on the asset, what activity you've done and what results it has. And most importantly, when you have a problem, be upfront about it. People appreciate it. I mean, like I said, we've done a lot in our time, and on the lending side, we've been fortunate on Lucern, and it's a different risk profile than lending bridge and hard money. We've not only have we not lost any money, we've beaten all of our projections on our historical deals. But in Alpha, we've had loans that went bad, and we've lost we've lost some principal for the investors, but they continue to invest because we let them know what was going on. We didn't hide from it. I find that sometimes people get very uncomfortable about sharing that info, but that's the worst thing that you can do. You don't want to kick the can down the road. You want to be upfront about the challenges you have. Whether it's something related from COVID, for those of you that own properties right now, depending on what state, there are issues with, obviously across the country on foreclosure, but leasing velocity when units go vacant. Are there people willing to come in and rent? Our assets up in the Northeast have had a slower lease up period, and stuff down in the Carolinas has been renting very quick, and we have waiting lists. But we share that with the investors. So on a quarterly basis, at minimum, you should provide that, because at the end of the day, when the investment is done, even if they made a nice return on it, or even if they made a bad return, they're going to make a decision about investing with you in the future. And more importantly, be willing to tell their friends and family and share that and say, like, Mark's a really great guy. I mean, he not only did he make us a good return, we had some bumps along the way. He always kept us abreast. So I wanted to say that you have to solve for that as well. So whether you're building a system, you want to create your, maybe a templated form that you're going to communicate with people. The more you can prepare in advance, the more organized you'll be and the less stressed, and the better you'll be able to be at performing all the other duties that you need to as a manager of real estate. So I think that's it. I don't know how much time. I know we're going to open up for a bunch of questions, and happy to go into detail on any of those things. And again, happy to share the marketing decks and investor updates for people that want that as well. I kick it back to Mark or Jason or Peter.
Perfect. Yeah, we'll kick you in. Hey, man, how you doing?
Doing great, man.
Awesome. So
See
good. Good. I'm gonna get a couple of us up here. So I know we had a couple questions popping up in the chat. So just for everyone's sake, IMS, the investor management software, you didn't start that from day one. So back in 2002, you weren't right out of the gate spending this money on this part, right? Because I know some people here will hear this and say, well, before I go out and talk to investors, I better start getting a platform, and now in the rabbit hole. So when in fact did you start setting this up?
So we launched Lucern, which is the equity company that owns and manages multifamily 5 years ago. We bought it relatively early on, probably earlier than I would say most people should invest in it. And I say this, that I already had another successful real estate company. We had money that we made from that. We were already investing before we officially launched this company and started taking in investor capital. So we kind of knew from growing this other business that we needed that. We didn't need it right away. And, as I was saying, that you could create a spreadsheet with tabs for each deal. Like if you're just going out to raise money and do a first deal or your second deal, it's not complicated to have 2 or 3 tabs and create a format that's good for you to review and that you can pull numbers and share with your investors. So I think it depends. There are folks that want to come into real estate that have run other successful businesses and they have capital to build their infrastructure. All the businesses that we have built up till this point, we really built boots on the ground, created revenue, reinvested, created revenue, reinvested. So there's not a right or wrong way, but you have to communicate and you have to share the proper info. So it's just a tool that makes it easier. So don't go out and run and buy it tomorrow. And I'm not a sponsor for the
Fantastic.
IMS. There's plenty of other platforms as well too.
how do you keep in touch with investors when you're in between deals? And so I'm not talking potentially the investors that are active, but maybe potential investors for future deals. I know there's a group here that are looking to get in their first deal, but haven't had the right deal in front of them, and are trying to understand how to keep contact in front of the investors when they don't have a deal to put in front of them, but they've already had a conversation.
Sure. So there's a couple ways that you can and should do this. You really should create a list. Like I said, go through your email, go through your social media, and you want to put some people that are in your mind a strong possibility to even have some remote interest in investing in real estate. So there's a combination of casual interactions and more formal interactions that you should be doing. And it's not an exact science, but you want to, I said, like, if you do create an email blast or you're doing stuff on social media or whatever, you want to share your story, right? Like, you guys do a great job of that and tell your story, both, work and personal. And I think that speaks to people, right? And they just say, oh, you know what? They're serious about what they're doing. So, you want to have conversations and pick up the phone and say, find out what they're doing, what they're investing in. Have you ever invested in real estate? One of the things I find interesting, which is kind of a little off topic from your question, is that, I don't know who they is, but people say that you should have 10 to 30% of your portfolio in real estate, right? It's no secret that some of the most of the wealth in this world was created, or a big portion of it, through owning real estate, and so the barrier to entry tends to be very high. And I see that barrier getting knocked down with a lot of stuff that's happened, both on a regulatory line and also in technology. And I think there's some really exciting things coming down the pipe with blockchain and potentially cryptocurrency, but definitely with blockchain and securitizing, in a way, real estate stuff. So people find real estate attractive, but their financial advisors never talk to them about it unless they're going to a REIT, because they're not allowed to, for the most part, unless they're a fee-based planner. But no, they're not allowed to. They're not incentivized. And so, in a weird way, I always say you should have a real estate advisor. We should create a whole new industry for, you have your financial advisor and you should have your real estate advisor. And you should have a part of your portfolio dedicated to it, not only because it's a great investment vehicle in terms of, being a hard and real asset. There's risk to it like anything else, but you have the opportunity for appreciation, depreciation, cash flow, all those things. So I went off on this tangent to kind of say that, hey, look, have that kind of discussion with somebody. Like, talk to them about why haven't you, or what would make, like, if you could invest in real estate, what would be important to you? Try to help have these open discussions and say, let them know, I'm talking to a group of people, and you're one of them, or however you want to say it, but that I want to share info about what we're doing. And if it's okay with you, when we have an opportunity, I'd like to run it by you. We're gonna need investors, and we're gonna continue to grow. And I want to be able to provide opportunity to folks that I know, and build off of that. And I think that's authentic, and you have to believe that. It can't be contrived or whatever. You have to truly believe it, because that's what you're aiming to do, right? You're aiming to raise capital and invest in real estate. If you're not, then don't do it. Like, don't do it for the dream. There's a lot of hard work involved in managing these assets and providing a good return, but you have to, climb that mountain and out of the gates, and let them know that you're there, and touch them frequently.
Yeah, it's
Did I
fantastic.
kind of answer?
Yeah, absolutely. And Garrett and Stephen both have very good questions. I'm going to ask Garrett's question first because I think it will be a nice step into Stephen's question. Basically, if you are in the friends and family route right now, that's your sphere of influence, that's your connection. How do you break outside of that to expand your network?
Sure. So the beauty of today is technology, right? There's so many platforms, whether it's Clubhouse or LinkedIn or any of the other platforms, Facebook. On LinkedIn, you could, I don't necessarily think this is a great fit, but you could buy a premium membership and write to people that fit a demographic that you're going after that you think are more interested or inclined to invest in real estate. You can be involved in your, if you're involved in your religion, whether it's a church, a mosque, or a temple, whether it's through a charitable organization, your kids' soccer, conversations come up. And having it naturally, like you ask people what they do, and I find that people, are intrigued when you tell them, you run a real estate investment company and create opportunities for investors to participate and get access to assets that are usually a challenge, to get access to. So, it's about, becomes part of your lingo. So you have to talk about it, and wherever you go, but I do think, to sum up this question, you should be posting stuff online about what you're doing and try to build some thought leadership. Like, hey, I'm going to look at this property. I found it challenging. Show a picture of an issue with the property and saying, I'm calling my electrician to understand what the cost is going to look like to pigtail this aluminum wiring. And it just lets people know that you are thinking about all these different pieces of the puzzle, so to speak.
Yeah, it's fantastic. And a follow up to that, Stephen asked, when you do move from generally the friends and family, so you're doing successfully a 506B, say, and now you're moving into 506C, what has been the best bang for your buck in terms of bringing people into your ecosystem, whether it be, of course, talking like tonight, or social media, or direct mail, or what have you seen as provided the most return for you?
I don't want to say I'm not good at it. I should I need to call up and set up a personal consult with Jason. But I've been, or Keely, both of you guys. No, I say this, that I have a very large sphere of influence. So I don't want to say it's not fair, but I've been in the real estate business doing a lot of different things for a very long time. So I have a very large sphere of influence. So by turning on some marketing stuff through our email and through some of the Facebook and social media stuff, if you follow Lucern, you'll see we're doing stuff weekly or whatever. We built some things on our website to make it easier for people to communicate, like small things, like a chat bot that asks, what you're interested in. Are you able to source deals? Are you an accredited investor looking to learn more? So we're trying to drive traffic in and then capture them. We provide all kinds of, we're doing some blogs and doing some thought leadership stuff. And so I haven't gotten a massive influx of people that are completely outside my sphere. They're people that are kind of on the peripheral that we're bringing in that maybe have seen stuff over time. Even with Alpha, we built that company doing over $100 million a year in loans by boots on the ground. I'm not the model of efficiency here, but somehow I get there and make the time for the people. But you got to kind of try out what you're doing.
Yeah, that's fantastic. When speaking to investors, say we go back to the start, right? And for someone here has not raised capital, has not done this on any deals, and this would be their first conversation, it can be overwhelming. Do you have any suggestions for 2 or 3 things that they have to make sure they hit to get points across, and potentially maybe 2 or 3 things to not focus on so they don't get overwhelmed in the conversation?
Yeah, I think it goes back to trust, right? So it's about building some trust with them by spending time, not just pitching them on what you're investing in. But I think you try to tell a little bit of story about who you are and why you're doing what you're doing. And then from there, I think it's important to share some high-level bullet points of what the investment looks like for them, and then talk about how you're going to communicate with them on an ongoing basis. So spend time getting to know them, tell a little bit of story about why you're doing this, high-level bullet points on a return that they can expect, and then how you're going to communicate and what they can expect from you.
David, can you speak a little bit to building relationships? We talked a lot about the long-term nature of relationships with investors and how crucial that is. But another aspect of this business is building relationships with lenders. And that, obviously is another important part of the capital stack. I was just wondering if you could maybe speak to how you build that track record and relationship with them.
Yeah, so obviously you can reach out to brokers or bankers that or ask other folks that are using. There are different lenders for different types of properties and assets, if it's a bridge or a heavy reposition versus a bank or a stabilized asset. And so when you're getting started, you want to, just like talking to a securities attorney, you want to talk to either, get a referral to a commercial broker who can kind of live across all different types of loans, and then talk to some, potentially local banks in that market. There's a lot of different directions to go, but the best thing is if you're bidding on a deal or you're looking to bid on a deal, bring that deal, even if you have no shot of winning it. You want to be respectful of their time, but this is also part of building that relationship. You want to bring them the deal and your underwrite on it and have them talk to you about what they think they can do, go through the process of putting the doc set together. The first time is definitely the most challenging, especially if you're going, for Fannie Mae or Freddie Mac, it's, especially if you do own a lot of assets or you have a lot of revenue streams or income, it can get complicated. But I think you got to take these deals and talk to them, or even sometimes we'll call up some of our lender relationships before we're bidding on the property. Actually, we do this almost every time to say, how are you going to size this deal? And part of it is garbage in, garbage out. If you have to know, the info that you're providing to them is good, because that's how they're going to relay back to what they can kind of do, and then you're going to base an offer on that. So you want to start early and often sharing and communicating with your lenders.
Awesome. Thanks for that. You talked a little bit earlier about some deals that didn't go to plan. However, the investors continued to invest with you. Miguel asked, could you talk about some of that? What was it? You touched on it, but specifically, what was it that those investors said, David really does the right thing. I'm staying with them regardless if a deal goes bad.
Sure. So I could talk about deal problem level on a multifamily asset, but where we've had principal loss, which has been on some loans, hard money. So, we would provide, because we in that business, we distribute each month as payments come in, we distribute to investors. So when we are distributing, we provide an update. We would say, look, the file's moved to legal. We're working on taking back the asset. We've gone and appraised the property. We understand that there may be additional capital needed. We have zero obligation in any way, shape, or form offset any costs or losses, but we have chosen to do it, and you have to disclose that. If you ever offset any losses on an asset, and we haven't done that of total dollars or all dollars, but you have to disclose that to the investors. You can't give them a false sense of, hey, we did X, and you didn't tell them that you backed it, because then they go into the next deal, and that can be a securities issue. I will talk about a major problem that we had on our first deal down in Charlotte, which actually turned out to be a massive win for us, with our investors, and for us as a company. So the first deal that we bought in Charlotte was an 85 unit about 4.5 years ago. And we planned to renovate all 85 units. It was a pretty distressed, like B-, C+ asset. And 45 days after taking ownership, we had a massive fire. Red Cross came in, people jumping out of windows, a few people broke bones, thank God nobody died. It was, fortunately, I say fortunately, it's not fortunate, but it was arson. There was a young guy that was trying to prove to his ex-girlfriend how powerful he was, and tried to burn the place down and burn 30 units that were damaged, 12 to the ground. So you can imagine our first deal out of town is a great welcome. And we toughened up, we got down there, we did what we had to. We had to meet new architects, contractors, we sourced things on the quick. We were able to, we kept them apprised of all of that. There was a very difficult time because our bridge lender was not releasing dollars, and we were working on getting insurance proceeds. And we came up with two ideas. We actually fronted money to the project that we had of our own dollars, and charged it at the same cost of the capital that we borrowed, to help move the project along, and we shared that with the investors. Had we not done that, the project would have really been stalled and delayed, and would have really affected the overall return. But alternatively, if we did not have those dollars, we had a backup plan, which was we could go out to the investors and say, look, here's what we're going to do. We're going to rebuild, which we let them know. We told them the time frame that it would take, and we said, listen, we could go out and say, look, we're going to provide an opportunity to any investors that want to front these dollars to make a coupon of X dollars. You'll make a good return, and it'll be just like the debt we had from the bank. So we were able to execute that. The end story, after 2 years, we got it back up and running. We sold it. And then a year later, we got the balance of some extra insurance proceeds. And somebody told me last week, this is over a year later, he's like, Dave, I got to tell you, he's like, I don't know if other people would do that, which I think they would, but we got a big insurance check, and that insurance check added an extra 10% to their overall return. They made an 87% return in a 2-year investment. That was a massive headache. You see how much hair I have? I had a lot more beforehand. But we got to work, and we let them know what was happening, and we rose to the occasion.
Yeah, it's fantastic. Can you speak, Tyrone has a question about how you approach deal flow, whether it be tools, broker relationships, marketing, what has been the process for you to get these great deals in front of you?
Yeah, so getting your first deal is, and building and getting more deals is challenging at first. And so linking up with another group or trying to help can be a way to do it, that not everyone's going to want to have you come aboard or whatever. But, again, I'm coming from a different place where we had a large company that was already in existence. My other partner that runs the asset management and kind of on deal sourcing had been financing multifamily owners at Berkadia all around the country beforehand and had a huge broker network that he dealt with on the finance side. So the way that we're doing it isn't necessarily helpful to someone new, but I will tell you, and this is really, really important, that when you look at a deal, you need to quickly underwrite it, size it up, talk to the broker about where your offer is, put a firm offer on the table quickly and be decisive, and don't retrade your deal. And you know, it's interesting because we're very active in the Carolinas, and we have a broker, a large group that we.
Before we jump over, talk to us about you know, retrading. Just some people may not be familiar with that term. When you say don't retrade your deal.
Yeah. So in like you negotiate the deal, and even before you get into due diligence, or you get into due diligence and you find something that's not relevant to a price cut, you start changing the terms. Like it could be you're going to get more financing, you're going to need more time as your attorney gets it. Like you make your terms when the contract goes to the attorney. Don't start adding extra time on. Don't start changing the price. That's the easiest way to make sure you never get deals. And the broker community in every area is relatively small. Trust me, they'll start talking about you in a negative way if you can. It gets that much harder. So if you're going to bid quickly, do your homework, do a quick deep dive, size up the deal, share with them your underwrite and why you're making this offer, why you can execute and what you're going to do, and hold to it. Now, that's not to say that when you get into due diligence that problems will come about that you may need to renegotiate because it didn't reflect the information that was provided to you. Those are two very separate pieces.
Yeah, that's awesome. I actually had someone, we went to LOI, agreed on terms, get to the PSA, and then all of a sudden they start negotiating. I'm like, why do we just do LOI before we even got the PSA? And then all of a sudden the whole terms are changing on the PSA. I said, why would we go through this song and dance, guys? we're the next step in there. Like, what are we doing? So well said. Well said.
Yeah.
Yep. Mark, what question?
Yeah, can you speak to, obviously so much of this is centered around, or your talk has been centered around the investor and their experience. Can you speak to a little bit how your process or how I guess you could call it client experience has changed at Lucern or with Lucern over the last few years? Kind of some things that you've implemented to improve their experience as an investor?
Yeah. So, we talked a little bit earlier about the IMS system. There's a lot of different systems out there to utilize, and you can do it manually. But as our company's grown and we're hiring more people and have more resources, we've upped our game as far as more detailed communications, more features in our IMS system. We've, more frequent updates and things of that nature. Just, kind of all that, that stuff, getting things out way in front, when we have offerings to start talking about in advance, or ways to communicate with them. We bought and invested into a good CRM system that we use at our other company, and that helps us to understand who our borrowers and investors and prospective investors are, and how to communicate with them based on deal flow, workflows and analytics that I can see on the back end. And so that stuff is further down the road, but as you kind of put those resources in place, you can utilize that data, just like you look at data on a deal and you try to understand, where there's opportunity to make money. You do the same thing on your communication with your investors. So the CRM system's been a pretty helpful tool for us.
So it sounds like a lot of leveraging technology, and you even mentioned some segmentation there where you may be able to draw out some insights from the data that you have to be able to better serve them?
Yeah, you can see, and we have info and can search based on investment size in the past, different geographic areas, what types of deals they've gone into, what, all those kind of pieces. And then from the technology that we've implemented on our website, from the chatbot and, some of the online marketing and advertising, we're able to obviously track the views and the click-throughs and what pages they see to more target to help connect with those folks that we think have a higher likelihood of wanting to engage with us.
So we have time for another 2 questions before we jump in there. Miguel puts together a great survey each time for each meetup. It helps us really just get a better understanding how we can provide more value to you on future meetups. Does anybody, for additional questions, feel free to take yourself off mute, jump in here, get a question on board. If not, of course, I have 2 follow-up questions from there. So I'll give it 2-3 seconds, but we'd love to hear from some of you guys. I know, speaking to some of you personally, I know you have questions on this topic. So here's your chance. If I didn't ask your question efficiently before, here's your chance to actually jump back in and ask it better than I did. I will ask a question. I had a conversation earlier. Someone was looking about, they were going to be brought into a deal, and in terms of being on and first deal, coming on as quote unquote helping with equity investor relations, doing some other parts of asset management, but a smaller role. And their question was, how important is it for them to jump into this deal for their future credibility?
I apologize. Can you repeat that?
Sure. So ultimately, this would be their first deal, but they'd be coming in on a minor role. And they're looking at this from a point of doing a deal where they are the drivers, the sole, the operators, really driving the deal, compared to doing a deal where they're going to be a minor role. In your experience, from what you've seen out there, how big of a credibility builder is it to just get into a deal, even if you're not being the main source or operators of the deal or sponsors on the deal?
I think it's a great path. I mean, if you have the opportunity, certainly if you don't have a deal at the moment that you can do, and it does give credibility to some extent, every little bit helps. So I would say definitely, without understanding all the pieces of the puzzle and what the relationship is, and who the person you're partnering with is, I would say do your homework on them. But yes, if all checks out, you should, and you're going to learn along the way, and you'll have someone by your side, hopefully, that has a lot more experience.
That's fantastic. That's fantastic. If you are looking to do a raise, do you, and I missed, of course, with Kitty Soccer, the beginning of this conversation, first deal, do you look to have the investor conversations in place where you can feel confident with an amount you can raise, or is the deal the driver for those conversations?
It's kind of a combo of both. I'll actually kind of give you one of the main reasons, selfish reasons why we launched the fund, right? And Jason, I think I might have shared this with you, but we've been doing syndicated deals and doing extremely well, but I have a very good stable of retail investors, and I feel confident on a quick raise. I could put together $5 to $7 million, and we have money that we can pull on to gap a good chunk of that at any given point. Beyond 7 starts to get a little challenging for me, and so part of wanting to do the fund is I struggle from the same thing at times. Like I would say, well, we know that we can manage and execute on a larger deal, but you have a very short period of time to bring all that money in, and you cannot not show up at the closing. You lose your deposit. Yeah. So you have to solve for that with a high level of confidence. So at some point, your confidence moves down. Literally raised hundreds of millions of dollars, and I have my limits too. And I said, I really need to grow a retail investor base larger than what we have. Raising equity on the alpha side was a lot easier because it was quick money. It turned very quickly. You know, when you invest in a real estate deal, you're committing, you know, on a fast turn a year or two, but it could be 5, 7 years. You can't go back and continue getting money from the same investor for every deal. I mean, they can, depending on how wealthy they are, but, you know, there's fatigue, investor fatigue that sets in. So the fund was a great way for us, and economically, we actually make less dollars on the deals that go in the fund than we do if we did on a syndicated basis, but it allowed me to explore sharing our message and building our brand. And so that's the exact reason I need to size up the stuff. Now, you know, like I said at the beginning, we already have over 15 million in commitments, and we're, you know, next month we're closing on 10 million, we're writing 10 million in equity. But we keep raising until we get to our full 25. And it's a lot easier to have these discussions with the investors for me, because I don't want to say I'm lazy, but like with anyone else, you have a lot that you're working on, and investors, you need to work that all the time. So sometimes I work better under pressure and waiting for that deal, but I need to grow that stable to be able to do larger deals. So hopefully that answers the question, but don't try to do a deal where you're going to need a $5 million equity check and you got 200,000 to your name, and you think you have 3 friends at 100,000 and you're not sure where the rest of the money is coming from. I don't want to say you can't rise to the occasion, but the odds are not in your favor, you know?
That's fantastic. Thank you so much for that, David. David, let everybody know best place to connect, how they can find out more about you and your team.
Sure. So 2 simple ways. You can go to our website, lucerncapital.com. That's LUCERN capital, CAPITAL.com. And on the webpage, you can look and find out more info about us. But there is a chat bot that really just, it allows you to quickly communicate with us. That'll come through to whoever on our team it's appropriate for, whether you want to source deals, share third-party resources with us, or want to discuss future investments. You can also, and you can use that to request copies of the marketing deck and investor updates, or you can email info@lucerncapital.com, and that goes to the entire team, and happy to help in any way we can.
Jason, I have a question.
How efficient David's gotten. Before I jump into that question, he's got a chat bot raising his capital now. So that's got AI raising capital, 10 million without even having to go through anything but having a bot.
I could geek out. I should share my screen, but it's cool to see in the CRM when you send out the advertising, and you can track how many people came, and I can see, like, if you come on, and I can see which pages you visited, if you clicked off. And if you click off, you're an accredited investor, we have like a delayed workflow where it emails you like 6 hours later, asking you in a casual way to have a phone call and putting my calendar for an invite. So I get meetings booked without ever having to write. And like, those are the fun, exciting stuff that as you grow, like you don't need all that out of the gates, but as you grow, you start adding to your business, you know? You always have to improve and sharpen the tools, so to speak.
Did you just see my smile like grow? Those are the things I love geeking out on, those systems. I have to have a phone call.
Yeah. Can I share one off-topic thing that we're looking at? This is more like it should be in a discussion on Clubhouse on a topic, but we've been having some interesting conversations with a company called T0, and there's other groups out there. I mentioned about blockchain and how stuff is changing, but super, super cool. And the concept is that once you raise your capital, it almost gets securitized. It gets securitized, but they call it tokenization, and it can trade on a platform. And the reason why I tell you this is that I do think the world of real estate is going to open up, and the more, like, I know a lot of this may be overwhelming, hearing all these different things, but just show up and listen and you gather stuff. But this will allow you as an investor to offer to your investors, hey, look, we're going to create a liquidity platform for you once the capital's been raised. So people have, family emergencies or you need other stuff. The biggest objection a lot of people have is, well, my money's locked up for so long. You can give them a nod and a handshake and say, look, I'll do everything to buy out your position or bring another investor in. But having a platform and some of these things that are happening are so exciting. So that will help with capital raising for us down the road. And we're in discussion. I don't know if we'll definitely go through or not, but we're keeping an eye and we're having ongoing conversations. So.
Yeah, that's fantastic. I had a conversation with Tokenism about a Tokenism IO about probably 2 months ago, and a lot of questions for me to still understand better. But I was like, man, this really is fantastic. And before we jump into rooms, Miguel had one question for you.
Hey, David. So David, hey, so my question was around the difference between the fund and the actual syndication. I know you spoke earlier that trust is probably the key to both of those there. Do you have a preference, or do you think you were able, I mean, when I think fund, right, people are kind of reinvesting in you as the brand as opposed to the deal. Do you have any suggestions on which one you should start first, or is it possible to start kind of like a fund without that track record? Can you just speak to that a little?
Yeah, I think it's very challenging to do a fund out of the gates. And to your point, at least you have, and we still get objections from some people that they like to pick their deals. And I always say, look, you could think, and we could look at a deal that we think is a great opportunity, and the return profile looks great, but life happens, and at the end of the day, there are things that are outside your control or in your control that turn that investment not to be great. But you get more diversity, more asset protection. But if you don't have a track record, it's hard to say, I'm going to buy these types of assets in these markets. I haven't done anything before. You commit dollars to me, and when I find the deal, I'm going to call the capital down. I think it's a very, very, steep hill to climb. I think it's, you have to have some deals under your belt, but, there's always people that persevere and tackle things that others feel are not. But I think you got to do it on a deal basis initially.
Thank you. I'll definitely try not to lose my hair with Ray doing that.
Awesome. David, thank you so much, man. Always fantastic. You're just a wealth of information. Yeah. If you could stay around, we're going to do some breakout rooms, just everybody get to part if you're free. But again, thank you so much, everybody. We're going to jump into small groups here. Really just take a moment to connect with other people. I found the most valuable points to growing your business, and even a lot of questions tonight. How do I meet more investors? Well, there's people here who both want to be active and passive, or active and passive at the same time. So connect with others, learn who your community is, because that's going to help us all grow. So I'm going to take the time, jump into here, and we'll jump back in a couple minutes.